Hello and welcome to this edition of the video market update from Orbex.com. It was somehow a boring week last week as there were only few economic releases across the board while everyone was waiting for the Jackson Hole meetings, which gave us some clues at the end of last week and finally moved the markets ahead of the weekend. First, Janet Yellen. The US dollar bulls were looking for a lifeline from Janet Yellen. There was also some chances that she could be hawkish and argue for rate hikes because of the financial stability risks. However, she did not. She talked about regulation, liquidity, and a few other things, but they are not an FX market driver. This is what led to the notable decline in the US dollar index at the end of Friday, declining all the way back to 92.52 at the close, and closing at these levels for the first time since May of this year. On the other hand, Mario Draghi, the ECB chairman, he came with some positive remarks and saying that the global economy is firming up. He also said that without the stronger potential growth, the cyclical recovery are now seeing globally will ultimately converge downwards. And due to his remarks, the euro saw fresh bids at the end of the US session on Friday, sending the euro higher across the board and closing the week above 119 for the first time this year. And we will talk, of course, about it later in this video. Looking quickly at gold before going into this week's fundamentals, gold has failed once again to break above the $1,300. However, what's more interesting here is that this is the first time that gold closes above the $1,290 for the first time on the weekly chart this year or since November of last year, which might be a positive signal in the next few days. Who knows? But we will hope for, or we will be looking for it. But at the same time, we'll still need to see a clear break above the $1,300 barrier anyway. Looking quickly at the sum or at the upcoming economic releases this week, Monday will be a bit boring as there will be no economic releases from Europe, while the goods trade balance will be released from the US. Tuesday is expected to be very calm as there will be few significant economic releases, including Japan's jobs report and inflation. In Europe, we will be watching the consumer confidence in Germany, the UK nationwide house price index, and the French GDP, while during the US session, we will be waiting for the CB consumer confidence index. Wednesday would be one of the most busiest days, days of this week, as we wait for many inflation data from Europe, including Germany and Spain, while everyone will be watching the ADP non-farm employment change and Q3 GDP from the US, or the initial reading of the Q3 GDP and the US crude oil inventories. Thursday will be also more watching some Asian data, including the Chinese PMIs, including manufacturing and non-manufacturing. In addition to that, we'll be waiting for Australia's private capital expenditure and the housing starts in Japan. In Europe, another set of inflation data will be released on that day, including the EU inflation and Italy. But during the US session, eyes will be on the initial jobless claims, core PCE price index, we have the personal spending, personal income, Chicago PMI, and the pending home sales. Finally, on Friday, which will be, of course, the most important day of this week as we wait for the US jobs report, and this would be the key ahead of the Federal Reserve decision in September. Estimates are pointing to 180,000 new jobs, stable unemployment rate at 4.3%, and a 0.2% average hourly earnings. But any beat in these figures would refuel the possibility for another rate hike by the Federal Reserve before the end of this year, but probably in December, not in September. This is it for the fundamental part of this video. Now, let's have a look at some technical charts. Beginning with the US dollar index, as always, and as you can see on the chart, this is the weekly chart for the US dollar index. And again, we actually tried to kind of trade within a sideways trend for the past 3 weeks. And it actually even tried to break above the 94.15, but it failed again to break above that resistance and actually continued to decline all the way back down to at the end of last week toward 92.50s. And right now, this is the first close at the 92.50s since almost a year from now. Since January of 2015. We haven't seen a weekly close at these levels since 2015, which basically gives us more and more signs for further declines ahead. However, for the time being, we're still trading within the same support area, which basically supported the US dollar over the past 2 years. The next level that we'll keep an eye on for the time being is the the 92.45, because it's first of all, this is 200-week moving average. That in addition to that, we have the 91.90. That's the lows of 2016. So this is why I still believe that traders need to keep an eye on this current this area here before looking into any kind of trade. At least if we tested the 91.90, and if it breaks through that support, that would open the way toward at least 89.65. Going forward to the other charts, and starting with the New Zealand dollar, we have a very interesting thing actually this week. The New Zealand dollar failed to break higher again, despite the fact that last week we had, or the previous week, we had kind of like a doji on the weekly chart, but it continues to show that the previous breakout was a fake out, and then it breaks all the way back down. That's the fourth, with 4 weeks of a decline for the time being. Now we're at the lowest level since almost since June of 2017. However, we have two levels to keep an eye on for the time being, which is the low of last week, which is 71.90s and 71.80s. That will be the level to keep an eye on. In addition to that, I would add one more level here, which is the support area that we saw back in 2016 November, which basically is confluenced with the 50-week moving average. That's why this is also important. 71.36. The Aussie, unlike the Kiwi, which basically remained also very strong due to gold, due to the economic releases that came in also all the way back last week from Australia, the jobs report, all of these data are supporting the Aussie. So right now we have the 78.40 is a very solid support and is a very high demand zone. For the time being, the next level they'll keep an eye on for the next few days is 79.79 or 79.80. But a break above that resistance would clear the way toward, or another test at least, towards 79.90 and 80 and 80.40. That will be the two levels I'll be looking for, where any retracing to the downside is likely to remain above last week's lows. Sorry. The euro managed, as I said at the end of last week on Friday, we are finally above the 119, and this is the same area that we have been talking about for the past 3 weeks, or even more than that. That's the high of 2015, and now we're breaking above that, and there's clear breakout on the daily chart now, which basically clears the way for further gains ahead, to where there's no much info, or there's no much resistance area, at least until 120, and even 120, 170. That will be a potential to keep an eye on over the next few days. Any retracing to the downside is likely to be capped above, or limited above the 17.16, the one that we have been talking about for the past 3 weeks. The British pound, it remained weak, and it actually now breaks through the trend line on the daily chart. This bull run that we saw on Friday, that will be just a retracement. That will be just a retracement. If you look at the euro sterling, also it was the potential, or the biggest trade of last week. But for the time being, the 100-day moving average still capping the rally. I still believe that 129 or 129 even 50s, that would be the highest that the British pound might go before the next leg lower toward 127.37. The dollar yen, it continues to trade within a very tight range. For the time being, I'm just going to keep on watching the dollar yen without any trade for the time being, after reaching all of our targets. But for the time being, I will be just looking to keep an eye on and to watch whether we will break through the support area, which basically now is standing around 108.90. A break through that support might lead to another test again to the 108.35. Last week we tested 108.60s, but I would stand aside from the yen and just keep an eye on it. Finally, gold and silver, as I said, this is the first weekly close above the 129 since 2016, since November 2016. For the time being, forget about this. Yeah, we don't need this one. So this is still within the trend line. We are still within the channel for the time being. Even if we want to draw this channel, we actually can, but we still need a clear break above the 1300, and especially 1300
1295 and also 1300 and or the last few weeks highs. A break above these two or those two levels above that, we will open way for another bull run ahead. Otherwise, gold will be a little bit at risk for another leg lower. The silver, I'm not going to comment on it, but it seems to be like a flag on a little bit, excluding this two days here, but it looks like a flag. But at the same time, I need to see silver at least above 1715 to give it some more push toward. At least we will be looking for 1745 and then 1745 and then 1770s. That will be my levels for this week.
This is it for the week. Thank you for watching this week's video. Thank you also for watching the previous weeks also. Please like and share, or like, subscribe and share this video on YouTube or on your social media platform. Also, you can subscribe to Orbex channel to get the latest videos on time. If you have any questions, please leave them below under this video on YouTube, and I'll try to get back to them as soon as possible. Thank you for watching. I'll see you once again next week. Have a good one.